Good day, traders. A short video today. A question from a trader regarding my daily process in terms of looking for trade setups. So the big picture generally starts first thing early in the morning. I go through all my charts, and I usually start out with a zoom out look so I can get a look at the overall template for the week. And so I look at all the major pairs, although I may focus more on gold, the indexes, or oil. Tentatively, I am looking just for setups. So the ideal situation is just getting the first few days, depending on how our initial balance sets up, and I'll do a bit more in depth on that in the next week. But just basically, I want to look at day one, day two, that sort of situation for high of the week, low of the week opportunities. And as I mentioned, some traders have asked; they're a bit confused because, I've said on a Monday you can get a day three setup and that sort of thing. And this week we've, just coming back to the concepts of pump and dump, we've had a market on the euro just dumping downwards into the low of the week in the Fed, and again, just focusing on the box. So I'm always looking at where is my Monday initial balance. That's the high and the low of the box. And then I'm looking at each day, if that's my high and my low of the week, do we break boundaries? And when those boundaries break, are they false breaks? At the timings, high of the day, low of the day opportunities, I'm only looking for the timing situations. And the odd time, like today, for example, the gap can offer pump and dump opportunities headed into the session. So as I've talked about, I'll come to the screen an hour before to see if anything's gone vertical. And so on the euro, for example, we had a market on Tuesday that gave a brilliant high of the day opportunity headed right into the U.S. session for a pump and dump for a vertical collapse. On day two, we had a high of the day situation that traded in London. And then in the U.S. session, as traders we have asked again, how do you know when the high or the low of the day has been locked in? It's always about the timing and then the nature of the pattern. So day one, day two typically will give us our peak formations for the week. In this particular situation, we have a first day runner that puts our low of the week in. And this peak formation then on Tuesday becomes a peak formation high down low. So if you can understand that, Wednesday is a stop hunt, false break, pump and dump into the peak formation at the high of the week. This is our new lower high of the week as we've come down and they've made a lower peak formation. Into the Fed, again, vertical, one push, two push, three pushes, and then we had different variations of creeping trends down into the low of the box. So again, Monday, Tuesday forms our boundaries, high and low of the week, for a squeeze and a vertical explosion into the US 12 candle window. So each day I may, obviously just take trades on certain instruments, and there's other great trades as traders have been trading pound yen crosses, euro yen, Aussie crosses, all these. We've had some fantastic movement, but you'll notice the pound, the euro, we'll just put these together. So we all had dump and pump templates on the pound, the euro, New Zealand dollar, and Aussie dollar, as well as gold. So sometimes the volatility in gold scares traders, but again, coming back to the big concept of working on the outsides and letting the market establish its boundaries for bigger trade opportunities, and obviously factoring in the calendar, knowing what's on the news. So Fed day, sometimes I don't expect to see a whole lot. This week in gold, we had a large day three trade, which reversed at the low of the week. So that was a reversal opportunity right into the Asian session. Then the rest of the day essentially was either trading with that trend, peak formation stop hunt into the U.S. window, and understanding when there's Fed on the table, just taking the trade and, getting out, knowing that the Fed is most likely going to do the vertical move. In the gap time, I'm only really looking to see, I've talked about using the Forex scanner, and I don't really myself use it a lot because I pretty much only look at the major pairs, and I'll look at maybe pound and euro yen or Aussie yen cross occasionally if the Aussie's moving or if it shows up on here. So Asia trades and I come an hour before the Europe window, I might look to see, again, what's had a lot of movement so far today. So Swiss yen, I don't really trade that, but I might take a look at the chart. And again, I'm just looking to see if anything's gone vertical and possibly setting up for a pump and dump type scenario as we've looked at, or just looking to see in general what is moving to see if there's any large percentage or large pip range gains. And I'll also look at the price in terms of the high, low, and where we're at, because I want to see where we're at in that 100 pip box, if anything's trading up near 75. So if we just take a look at some of these, let's see, one of the major pairs. We can have a look. US Swiss. So it's trading up at 96.50. And obviously we had a fairly large run, and just coming and looking at that template, as some traders we discussed yesterday, we had day one. Again, day one, Monday extends the range. That's our high and our low. Tuesday gave a great day two setup in London. So day two is 3 pushes and trading back against that. It doesn't have to be, but that's a counter trend short in London for 50 pips, which they reversed into the U.S. in the gap time and then in the U.S. window and continue to go higher. So day one, day two, high of the week, back inside and the creeper up into the Fed for a vertical move down, which gave us our first red day. Now, first red day, so coming back to some simple terms, my target is always, if I'm in a trade, is the blue tracer, the previous day's high or low. So what that means is that if I get a first red day, I want to see 3 pushes and a 3-level sell high opportunity. We'll look at the US yen. It was in London as well. Sometimes that will be in the US. It'll take 3 sessions. So it moves away from the target, and the target is going to be the low of the week. That's why first red day can be a great opportunity. Now, this was a news catalyst, but you'll notice, again, 1 push, 2 push, 3 pushes right at the London Open, and then bang on the news straight down. So if we look at today's chart, we just looked at the scanner. It was at 50, but had I looked at this earlier, it would have been trading somewhere up above 75. So again, on that upper level, with the thesis being it's gone 3 levels. We take a look at the chart. It certainly has. It's gone up from 0 to 50, 50 to 75, and then the third level, and possibly put a peak formation in place in the gap. And that's sort of what we want to look for either a trade opportunity in the session for the short trade. So we've gone up 3 levels in the gap. We've now put in a low, and I'll shift that low up, as you've seen me do, to look to see where volume is possibly trapped. So if we zoom out on this, and I'm biased to the short side, so the same process can be applied on the long side. And then I just go back to timing. In this particular situation, we have obviously the high may be locked in, and it's above zeros, and they've come below 0. So what I'm looking for is peak formations heading into the session open, which could be locking in these lower highs. Lower highs stop on 1, 2, 3 engulfment. So I'll track that now as it moves sideways, knowing that we're looking 25 to 50 pips. We're above 75. So I want to try and get filled somewhere in this upper rectangle. Now it breaks down, but we want to possibly sell the pop-ups, knowing that when London opens, so we break structure, we break down, and then London opens and it pulls right back up into that box. I'd be selling that and putting my stop above the high in this area somewhere, and then just looking back at the chart to see where that move began. My profit target would be a minimum of the low of the day for Asia, and possibly targeting obviously 50 for 25 or more in that trade setup. So hopefully that makes sense. That's all. It's very simple. I'm looking for something up on that upper third level, possibly where they've locked it in already in the gap. We got trap volume up high. We got peak formations in that first 15 to 30 minutes. It breaks down and then comes right back up for the stop hunt in the London session for our sell trade, the engulfment stop. In this particular situation, I would put my stop above these lower highs. It should not go any higher. as it's breaking down, possibly add. And then when it breaks this swing low, I'm going to break even. That's the trade process. And I'd have preset targets somewhere down at this low, but I would watch how price behaves. If it's going really aggressively, I would be prepared to manually exit that trade. But as we get the pushes, taking the money off, and that's as hard as it gets. Today, what I liked about the Aussie dollar, which I don't normally trade a lot, it doesn't, I'm looking at gold or the indexes, but in this particular case, the Aussie had a great, nice little half Batman and dropped down in Asia back and consolidated right at the high of the box. So again, just coming back to that understanding classical charting, most breakouts fail. So we get a breakout that fails. We get the half Batman formation, the M structure. I just happened to notice it earlier, but then it broke down, and I was watching this. It broke down again inside, and this little 1, 2, 3 pattern right into the open of the Europe window was a little gift. And again, I use the 1 minute chart just to time the entry. I'm just still gonna. It's all about the level. So again, this level is the high is at 24. So somewhere in that 20 to 25 range is where I want to get filled. Again, it broke down. Traded sideways and then broke down underneath the high from Wednesday, gave me the M structure right into the open for the short trade down. I'm looking for easy things. Peak formation, the high was already locked in. There's a big space here. Again, we talk about space all the time. Does the market have room to fall? And, I'm just looking for simple stuff. And on the S&P and the NASDAQ, I didn't really look today, but there was a brilliant, nice pump and dump. So again, in the Asian session, they made a high in that 3-hour window, and they went vertical in the gap time and made a higher high. And that on the smaller time frame gave a beautiful pump and dump scenario. And the NASDAQ was probably a little bit cleaner, but again, just a beautiful example of going vertical, trapping volume, holding it up there, breaking down. This is prior to coming to the 12 candle window, breaking down. Our highs locked in, it breaks down, pulls back, gives a peak formation. That's a stop hunt right into the open of the Europe window. And again, you're at the screen, the engulfment's up high at double zeros. As it's falling, you could be adding or taking a position and just placing the stop above the high. 25 pips. If you get filled down here, it's still going to be 25 because the market the thesis is that this should collapse and go vertical. It's a pump and dump. And so I don't really, expect a whole lot other than that. And if it behaves funny, I'll just get out. And so again, that's just a textbook perfect setup. We got a high and a low made in the 3-hour window. It goes vertical in the gap time and stays up there for a couple of hours, an hour and a half anyways, breaks down just before our session starts, and bang, there's a vertical trade. And again, the NASDAQ. So the NASDAQ made a high of the day, and you'll notice that they went above the high of the day in the gap time. And again, I always talk about I draw my line because that's the high, and I want to see if they can break out. That's all fine, but I want to see if they lock it in. And they lock it in. There's the M. It breaks down. And this pair probably has a cleaner chart. It didn't move as much, but it's still a great setup. There's our peak formation into the open of the session. Basically, it's a first bar trade straight down to the low of the day. And you'll notice not everybody's charts will be the same in terms of the numbers, but basically they went up 3 levels, just above 75, came down to the double zeros. And the same thing applies going the other way. They dump it down into the bottom of the box. First hour makes a low. Creeping trend makes a lower high. London opens up and trades down into the low. First 15 minutes, engulfment. And they go vertical back up on the low-hanging fruit. So I like this trade because it collapses, and I just like to be in and done in that sort of setup. It doesn't happen all the time, but that's a really golden one. I didn't see that today. I wasn't really paying attention. I was looking at the Aussie, and that moved really well, just not as fast. But again, these are the sort of trades I'm looking for. I really don't want to spend a lot of time at the screen. That tends to be very detrimental, non-productive, and over time not as consistent. These are the setups I'm looking for. Obviously, there are bigger setups that evolve over the course of the week and the days, and I look for first red day opportunities. I look for session opportunities that are part of the larger pattern. We had that yesterday. Again, the Fed 3 pushes, 1 push, 2 push, 3 push. It broke down. We had a head and shoulders on the 15-minute time frame that broke down, and into the Europe-London window, we had a beautiful collapse, which I probably could have stayed in for longer. It kept going, and then again the 1, 2, 3 vertical stop hunt back into the break of the previous day's low for the continuation move in the U.S. session. So again, same sort of scenario. The 1, 2, 3 is a pump up stop hunt right at the end of the first hour for the engulfment at the previous day's low under the Fed. Trap volume. You can see the whole day becomes trapped, whether they're in the market or not, doesn't matter. Traders who are in breakout trades, this puts heat into them. Then the market collapsed into the low for 3 pushes before engulfing the low and going into consolidation into the new day. So keep it simple, traders. Have a great session today, and hopefully you got value from today's video. Have a great day. May the markets go with you.